Welcome to Business Authority Radio, bringing you insights from today's thought leaders, professionals, and influencers. With your hosts, Neil Howe and Craig Williams.
Hello and welcome to the show. This is Neil Howe, your host, and today's guest is John Schmehl. He helps taxpayers of all shapes and sizes save their hard-earned money and minimize the amount they need to pay to the government in taxes, whether through proactive tax planning or defending taxpayer positions in controversies with the government, including defending criminal investigations. He wants you to be able to keep as much as you can to spend as you decide. And in addition to having worked at the IRS as a trial counsel for 4 years, doing both civil and criminal tax work, he has spent over 30 years as a tax partner in his Philadelphia law firm, Dilworth Paxson LLP. Welcome to the show, John.
Thank you, Neil.
Well, let's get right to it. Let's find out a little bit more about yourself and Dilworth and Paxson, and what kind of clients are you helping there?
Yeah, as we said, we help a wide variety of clients. I think our bread and butter is the entrepreneur who has a good-sized business with, fair significant amount of legal issues that arise, but also, helping that person in their tax planning and structuring the transactions. If they have a tax audit or controversy, we help with that. And so we do proactive tax planning as well as some defensive work, and always trying to, have people pay as little as they have to under the law.
Well, there's definitely a lot more entrepreneurs that are starting businesses and, solo entrepreneurs as well, that just don't have these things in place to have, their taxes done and accounting and all these different things that come with running a business. So talk to me a little bit about, what these entrepreneurs really go through. What kind of problems are they really having, and how are you able to, help solve that for them?
Yeah, they have issues about their tax rates. When you have transactions, obviously the first priority is to see if it can be a tax-free transaction where there's no tax involved. If they do an acquisition of another business, or they're selling their business. When you get to a situation where there might not be a next generation to take over, then we're planning sale transactions and trying to make sure that as much of the gain that you have to recognize, if it's not tax-free, is taxed at the lowest possible rates. And generally those are long-term capital gain rates for companies, and whether they be stock of corporations or partnership interests or LLC interests that they've been held for more than 1 year, you can get the beneficial rate. And in the new law, there's a provision that everybody's interested in, which gives what they call pass-through entities, and these are S corporations, partnerships, sole proprietorships, LLC companies, that have a pass-through tax structure, meaning the owners are taxed and not the company. There's a special deduction in the new Tax Act of 20% that has some complicated calculations to get the full benefit, but it generally gives these businesses 20% deduction from their income. So it reduces the maximum rate in the federal system from what is now 37% to 80% of 37%, which is about 29.6%. So it's a very nice benefit that Congress has allowed for individuals to kind of help them equate to corporations, where the new Tax Act has reduced their rate to 21%, which is a very favorable rate.
Yeah, I mean, things seem to be going in the right direction there. And, as far as what I said about you in the intro, you're trying to get as much money in the pockets of the business owners as possible. So the government is definitely helping out there with the new recent rules. But what else helps out save the taxpayer some money? Is there certain structures that are more beneficial than others?
Well, we've analyzed under the new tax law because, what we call C corporations, which are corporations that pay their own tax, have a 21% rate, and pass-through entities have 37% if you qualify for this new deduction, the 29.6%. So the question has arisen fairly frequently as to, well, perhaps I should be a C corporation because I can only have to pay 21%. And well, that is true for the short term, and it assumes that the profits are going to remain in the C corporation, because if you distribute them to the owners, there's a second tax which offsets the benefit of the 21% rate. So you have that situation. Then you also have to look at the exit scenarios, because when you have exit scenarios, you want to have one level of tax, not two levels of tax. And buyers prefer to buy assets in most cases. So if you have a C corporation selling assets, you're going to have a corporate tax and then a second tax to get the money out. So I think the long-term view that I express is still that pass-through entities have a long-term benefits over C corporations, which have the short-term benefit of the lower rate. So that we've had that question frequently.
Right. So we've got the tax planning, which is, trying to get things in order, and we've got the structuring to make sure that the business has the best tax rates and everything. But, what kind of problems do you handle for your clients that might have arisen, that maybe they've got into a little bit of trouble and they need some help with the IRS that are on their backs?
Yes. We've seen a number of people that have foreign accounts. That's a relatively common problem these days, that have gone unreported in the past years. And the IRS has spent a lot of effort to try to find those accounts. And so we've walked clients through that situation where they have to fix their past problems. Lots of times these clients didn't even realize they had a problem. They may be an account that their grandparent had in Europe, and it's been sitting there kind of managed for many years, and now some people have just discovered the accounts. And so we help walk them through the IRS program, and there's a disclosure program where you can get relief or know your fixed cost to sort of catch up and make the IRS whole for a certain period of years, and know that you're not going to face any more serious problems. So we've seen that a lot. And generally, there are examinations of people that might take a capital gain rate on a transaction, and the IRS might dispute that and say, well, this is ordinary income for various technical reasons. And so, I've had litigation on that issue in the United States Tax Court. So there's sometimes defending positions that the IRS raises on audits, where they challenge a deduction or they assert extra income, and then we'll go through the controversy process to contest the IRS determination, and that has several levels of engagement with the IRS at appeals or at in the tax court or in federal district court. So that's another area that we help out. Then there's people that might have unreported income because they have intentionally omitted income, and they have IRS investigations, and we work with IRS to, again, the most important thing is to avoid any criminal penalty and try to work out civil resolutions in those situations. We also help people that might not be able to pay the tax that they agree they owe. So we call that collection work, and we will work with something called an offer and compromise, where you fill out financial information, submit it to the IRS, and attempt to compromise a debt that you owe, but you're unable to afford the payment at this time for whatever setbacks you may have had financially. So that's another aspect of tax work that we do at the law firm.
Mm-hmm. Yeah, there seems to be two distinct areas right there. First of all, there's getting to the stage where you know that you owe money and you realize that that is an issue and you have to pay it, and there's a problem there, like you said, some people paying it. But before that, just because the IRS says that you owe X amount doesn't necessarily mean that they're always right. Explain why you can go and challenge the IRS on this.
Yes, there are technical issues that arise, and not everything in the tax law is 100%. In fact, very, very little of our tax practice is dealing with 100% issues. There might be gray areas, there might be wrinkles, and areas to explore for tax return reporting positions that the IRS may not agree with. That doesn't mean they're wrong. It just means that the IRS may believe that a different interpretation should apply. So those areas involve advising taxpayers when they're doing their tax returns. We don't prepare a lot of returns at our law firm. Most accounting firms have those types of practices. But at the law firm, we're advising accounting firms and taxpayers on tax return reporting positions and giving opinions and helping out on the presentation of the transaction on the return, and knowing that there may be some risk because the law is not clear in all the areas. So there are gray areas that we have to make interpretations and use the law and the IRS announcements and court cases and make our analysis, advise the taxpayer, and depends sometimes on their level of risk assessment and what they're willing to undertake. Some clients are more conservative than other clients, and we take that into account and make sure that they understand all the pros and cons. And sometimes the IRS will challenge an issue when they pick it up an audit, and that's where we then defend the position. And in many tax cases, you end up with a settlement, and the IRS agrees that, well, they may not be 100% right, and you may not be 100% right. So you try to work out the hazards of litigation on both sides and come to an agreement. And then most of the times you can. When you can't, then you end up going to trial.
Mm-hmm. So what is something, if anything, that the IRS oftentimes will claim that is not actually true, and you're able to, get some kind of result from them there?
Well, sometimes it's whether something is a deduction or should be what's called capitalized and put into the basis of property, which you have to amortize over a number of years. So that's an area of sometimes common dispute where the IRS will look at a tax return and say, well, this legal fee should not have been deducted. It should have been capitalized into an asset you acquired. So you have to amortize that legal expense over a number of years. And that's not always a clear-cut issue. So, sometimes you go to battle on those issues and again, try to resolve it. So you have those issues. Sometimes we'll do something called a 1031 exchange, where a taxpayer is going to sell a property and they want to acquire another property. And oftentimes it's difficult to have that occur at the same day. So there's something called deferred exchanges, and there can be tricky issues there that the IRS might look for a slip up, and you have to defend, the transaction as it was structured to be tax-free, which is the goal of a Section 1031 real estate exchange. Mm-hmm. Under the new act, you can only do real estate exchanges. They changed the law, and you can't do exchanges of personal property, only real estate. So there's a little less 1031 transactions going on, but that's sometimes an area that the IRS will look closely at. But they're always looking for deductions they can disallow, or there may be a timing issue on income where the taxpayer believes they can defer income to a future year, and the IRS believes that the income belongs in a prior year. And sometimes we're battling over which year it belongs in, which can have a significant effect because of interest costs. And you always want to be able to defer income where you can. So the IRS will look for those issues as well.
Right. And are there any areas of business that you specialize in, such as handling real estate transactions like that?
Well, we really have a wide variety. So, because I've been here so long, I guess you could say I specialize in a lot of areas. But mergers and acquisitions is an area that I deal in on a daily basis. Again, where you're getting an equity interest in a company. You like to try to structure that as tax-free, and there are certain rules that you have to follow to do that. So, I advise a lot of people on mergers and acquisitions. I advise a lot of people on tax controversies, as we discussed, and where it's because we represent a lot of family entrepreneurs. They're in all types of businesses. So we deal with manufacturing businesses, we deal with real estate businesses, we deal with a lot of tech companies, and you see a lot of questions on Bitcoin today and how that's treated. So that's a more frequent question in the last 12 months as more and more people have gotten involved in that. And how do you treat, what's the tax consequence when you exchange Bitcoin for something else? And most people don't realize that that can be a taxable event. So we have to educate our clients as to what happens when they exchange Bitcoin. And even though you're turning from sort of one currency like investment to another, there's a taxable event when you cash in Bitcoin that you invested in at a low price and sell at a high price back to dollars. You can recognize income. So
right. And the recent stories have been coming out that an extremely small percentage, like a fraction of 1% of the people that have made money with Bitcoin are claiming it on their taxes. What's going to be the consequences for them?
Well, the IRS has been battling Coinbase for information on taxpayers who have invested in Bitcoin and then cashed it in or exchanged it for something else. And they went to court. Coinbase objected to it was called a summons, where the IRS requests information. And it's something called a John Doe summons, which means there's no particular taxpayer identified. You just want information from Coinbase as to all of their clients who engaged in significant Bitcoin transactions. And it ended up that the court agreed that the IRS could obtain information with names and addresses for people that had transactions that exceeded $20,000. So it wasn't every person, but anybody who had a significant transaction or transactions that exceeded $20,000, the summons will require those individuals' names to be released to the IRS for further examination. So we are seeing some people who may not have realized that they had an issue and now realize they do. So again, we're trying to get ahead of those types of things and help them to fix their returns in a way that's at the lowest cost, and make sure they come forward and beat the IRS to the punch. You always want to, when the IRS may be coming, you always want to try to beat them to the punch and do the right thing and get the return fixed.
Yes, definitely. But what does that say about the cryptocurrency market now, where all this information and the whole part of the crypto part of it is that their information is safe and secure, but now Coinbase is giving that information to the government?
Yeah, I think the Bitcoin investors have expanded from originally people very concerned about security and private transactions to people that are trying to make money from the investment. And so it really has, I think, turned a corner where people now are just looking at it as, hey, I'm going to invest it to make money. And just like I invest in stocks to make money, I'm going to invest in Bitcoin to make money, and not so much caring about using it for transactions, but just holding it for investment. So those people are more aware, I think, that they're going to have to report tax consequences. So I don't think it has diminished the interest in Bitcoin that these things are going to come to light and they're going to have to be reported. But because I think there's a whole new marketplace, it seems like these days, of people just wanting to invest and believing that it's going to become more valuable in the future and they can cash it in. So I think it's still going to be a very active.
What's your personal stance on the Bitcoin and cryptocurrencies? There's a lot of people out there that say it's the wave of the future, and there's a lot of others out there that say it's a bubble that's going to burst. Where do you stand on that?
Yeah, not so much a tax issue, but we have clients who are very bullish on Bitcoin and other cryptocurrencies, and believe they're here to stay, and that they will, with the blockchain technology that's behind it, will be an everyday usage in various different industries and different purposes. So they believe that Bitcoin is still the wave of the future. It's hard to predict how it's going to rise or fall, but it certainly seems, personally to me, to be quite a risky investment, since there's not a whole lot supporting it in the way of gold or silver or anything tangible. But it's still holding its value, significant value. A lot of people got in very cheap and have made a lot of money. So if our clients believe, I think it's here to stay and will be more and more prevalent.
Well, it's certainly here for now, and it seems like it's going to be around for a little while longer at least, and there's going to be tax implications for all that in the coming years, so we'll just have to wait and see on that one. So, yes. John, tell me of a story of one of the clients that you've helped. Give us a case study of what kind of issues they were having when they came to you. What were you able to do for them? How were you ultimately able to solve their problem? And what outcome did that give to their life going forward?
Yeah. Well, we've had a client come to us recently with, a sale transaction, and they were quite concerned that from what they've been told to date, that they were going to have a very large tax hit for doing the transaction, and one of those cases where it might be a double tax hit, as we talked about earlier, where you have a corporate level tax and an individual level tax. And so we looked at the acquisition and came up with a structure with a few modifications in how they had their company structured today to allow them to do an acquisition where the gain was significantly less than would otherwise have occurred if they had just completed it as they intended. And so there were very significant tax savings in the new structuring. So that's all common tax planning to help a client that may be looking at a very big tax if they do the transaction one way, but a much reduced tax if they do the transaction the other way. So the clients are always quite pleased when you can show them a way to minimize the tax on a transaction that they thought was going to cost them a lot more. So that's again not uncommon to come to a case and the tax lawyers see a transaction and are able to maneuver some companies and structures and form new entities and reorganize in a way that allows the transaction to occur in a much more tax efficient manner.
And that's extremely important, especially when you're dealing with entrepreneurs that have, put their life, blood, sweat, and tears into their business, and they're coming to a time where they want to pass it on. It makes a difference, how much savings they can make, whether they might, have to still do something on the side for a little bit of extra work, or where they've got their retirement covered. So you really can make a huge difference in somebody else's life there.
Yes. Another area where you try to save people taxes is in retirement planning. And while our firm does a lot of that, my involvement in that is less than sort of mergers and acquisition transactions, but there are significant ways to set up retirement plans for entrepreneurs where they can put away on a tax deductible basis money into retirement accounts for them and their employees, and get a deferred tax and save up money tax free for retirement. So that's another tax planning thing that we do on a regular basis.
Mm-hmm. Well, John, can you share with me a lesson that you learned early on in your career? And you've had a long career as a tax attorney, but share with me something that you learned very early on that still impacts how you do your business today.
Sure. Well, I worked at IRS for 4 years out of law school as an attorney, and learned some of the inside tricks of how things work, and that's been very helpful. But something I learned is, IRS tax people are humans too, and always to treat your adversary with respect. And I think that's gone a long way to help when you do get into a controversy and you do deal with IRS personnel, to know that they have a job to do, you have a job to do, and treating them with respect, I have found, has always gotten a better result than any kind of hard push tactics and getting too excited and challenging them in ways that might get personal. So I've found there's a much higher level of success to, because I used to work there and know that they're good people too, and we work with them, and I think it goes a long way to helping your client in getting resolutions with government officials.
Right. And ultimately, you're still in the people business. You're dealing with people every day, and everybody wants to be respected, even when you don't agree. So right. Tell me, John, what's the most important question somebody should ask when they're evaluating a tax attorney? What should they be looking for?
Well, I think, you want experience. Certainly, cost is always something that should be discussed. And we try to estimate transaction fees, and it's a very difficult thing to do, but we do our best. And I have a prejudice because I worked at the government. I think government experience when you're dealing with taxes is useful because you have seen how the government thinks, and a lot of the procedural ins and outs. So I think that's an advantage. It's not everybody has that, but I think it is an advantage. And but to understand that the tax lawyer talking to has faced the problem before and can give you insight. No one knows everything off the top of their head, but it's good to have faced a problem in the past and then use that experience and build on it for the future. So I think those are the questions you'd want to get familiar with.
Great. So if somebody is looking for help, how do they find out more about John Schmehl and Dilworth and Paxson?
Well, our website is dilworthlaw.com, and my personal email is jschmehl@dilworthlaw.com, and my office number is 215-575-7201. We do get calls, and we try to set up consultations and see if we're the right fit for the client and what we might be able to do to help them, whether their problem be structuring a transaction, structuring a company, doing a sale, selling real estate, having a tax audit to deal with, a collection problem. We really deal with almost every tax issue you can imagine. So we're there to help.
You're based in Philadelphia, so do you deal with just Pennsylvania, or do you deal with people from all over the country or all over the world even?
All over the country. I say mostly we're in the Mid-Atlantic region. As far as helping people, Delaware, New Jersey, Pennsylvania, and to some extent New York, but mostly the New Jersey, Delaware, Pennsylvania area. But when you're dealing with federal taxes, it doesn't much matter where the client's coming from. So we've helped people in New England and the West Coast and various areas where entrepreneurs are engaging in business and get hooked up with our law firm, and we assist them in federal taxes where you can really be anywhere and help with that. And to some extent, we do international assistance in how you invest in the United States if you're a foreigner, or how you might invest in foreign transactions if you're a U.S. resident. So that's not a large part of the practice, but there's some of that as well.
Great. Well, John, I've enjoyed talking with you today. Thank you for all the information that you have shared with our audience. We've been listening to John Schmehl with Dilworth Paxson. You can contact him at dilworthlaw.com and get all his details there and get some more information if you're needing help. So thank you again for being a guest on Business Authority Radio.
My pleasure. Thanks for having me, Neil.
And to our listening audience, if you like what you hear, hit that like button and share, and we'll see you next time on the show.
You've been listening to Business Authority Radio with Neil Howe and Greg Williams. To learn more about the resources mentioned in today's show, or to listen to past episodes, visit businessauthorityradio.com.